Joined by Dan Flax. He's Neuberger Berman senior research analyst. And Dan, why don't we start just with the numbers we got last night, because that's really the focus of the markets this morning. Both Microsoft and Alphabet coming out with numbers that were weaker than expected, but maybe not worse than the whisper numbers out there. They weren't terrible, and so the stocks are up today. Does that surprise you at all?
Good morning, Becky. It doesn't surprise me, given how much negativity there was in the run-up to earnings. What we saw last night with Google is that the durability of search is extraordinary, even what is, of course, a very difficult environment that all of the companies are facing. You couple that with the cloud business for Google that's in its relatively early stages, and we think there's a lot to like, in terms of the investment over the next 1 to 2 years. And then if we look at Microsoft, they, too, have demonstrated very strong execution. While not immune to the macro challenges, their cloud business, Azure, performed very, very well. And so we're looking very carefully at the near-term data. But from an investment standpoint, we are excited by the opportunities we see here for those companies that can innovate, execute on their product roadmaps, and ultimately grow over the next 1 to 2 years.
Dan, one of the big questions has been capex spending. Will people continue to spend on this? Does this clear that question up, or does it just kick the can down the road?
I think it's going to be a mixed environment in the near term. I think for all companies, for example, all of the customers of Microsoft or the Google Cloud, those organizations need to invest. They need to transform their businesses. And these digital platforms we'll see from Amazon Web Services tomorrow night, these digital platforms are really foundational to the future. For all companies across industries that want to compete, they do need to invest. And so capex, while certainly lumpy, it is really key to creating value for customers and ultimately shareholders of the respective companies.
But I think the big question has been, did we pull forward a lot of spending because people were doing so much work from home? Their companies were trying to make sure their services were bolstered up. Did that pull forward or did it not? Is this, I mean, it certainly doesn't seem like it to this point.
There's certainly pockets, Becky, in terms of when everyone was working at home, they had to buy more PCs, more peripherals, all of that to make their home offices work effectively. I think the enterprise environment, this transformation of companies, that is very, very early. Remember, many of them had to respond quickly. And so now, as the leadership of those companies, the men and women across their technology and business organizations work out what this new environment is like, in many respects, even with a difficult economy, they're just getting going. So we certainly expect lumpiness. There are, of course, difficult compares to your point in terms of, was there a pull forward? But as we look out into next year and more importantly into 24 and 25, we see very, very interesting opportunities at current levels.
Do you buy Apple ahead of its earnings release?
I do buy Apple ahead of its earnings release. We are certainly in a seasonally slower period, and there are concerns about China. What we're focused on is really this ability to unveil new products later this year and really execute across iPhone, across wearables, across services. And so there's certainly near-term compares that are difficult, of course, the macro economy, but we've seen terrific innovation over the company throughout the pandemic. And what really stands out, in my view, is that their ecosystem, the developers around the world, the millions of people who are writing applications, that really remains vibrant and robust. And that's a really key part of the story for Apple. And so we like the shares. We are buyers today.